All right, hi everybody. Thanks for joining us for this Google Hangout. Uh, your hosts today are Tom Murphy, the Vice President of Student and Alumni Services and Consumer Lending at the Harvard University Employee Credit Union. And my name is Ilya Lewis. I'm manager of the Federal Work Study Program. Thanks for all your questions. Keep using the question panel over there and upvoting those questions. The top two questions we're going to go over in the presentation. So we're going to hold off on those for now, but keep asking those questions. If you have any private questions you'd like to ask, you can reply to the SEO web at FAS email address, and we will answer the question without mentioning your name. So why are we having this hangout today? We're having this hangout because senior surveys have told us that Harvard students want to know more about financial literacy. So we're starting off with credit today. So on the agenda, next slide please. On the agenda, we have the need for credit. Why is it important to you now? We're going to go over credit scores and credit reports. And we're going to talk about how an undergrad can build credit now. All about credit cards, how to be responsible, how to apply for a credit card, what to look out for, and some pitfalls. And then we're going to answer your questions. So let's start with the need for credit. Why do you need credit? Credit's the lifeblood of the American economy. You're going to need credit in order to purchase a car after school. For your first professional job. You're going to need it to rent an apartment too. Landlords will look at your credit. They'll run your credit before they decide whether to rent to you or not. You'll need it to buy insurance like auto insurance or renter's insurance. And in some cases, you'll even need good credit in order to get a job. People with bad credit are considered a bigger risk. So particularly in the finance industry, they're looking for people with good credit. So why should you think about this now? You're still in school. Some of you are freshmen. Some of you are seniors. But why think about it now? One important component of your credit score is the length of your credit history. The longer your credit history, the better your score. So the earlier you start, the earlier you build credit, it works in your favor. Also, it's all about building good habits. So good habits now translate into good habits in the future, and financial good habits are quite important. If you wait until after college, it extends the timeline at a critical point in life, so it makes sense to start thinking about it now. Next slide, please. So I want to give you two examples of why credit's useful. We have two students, Allison Kirkland, Sam Pennypacker. They both graduated Harvard and went on to work as management consultants. The job required a lot of monthly expenses, such as travel, food, hotel, rental cars, and their employer said that the employees have to use their own money for any expenses, and then they get reimbursed for those expenses at the end of the month. So Allison, she started building her credit while at Harvard. She might have taken out a small loan to build credit. She might have received a low-limit credit card, but she started building it in college. Whereas Sam, he waited until he got his first job. He thought, I could go with my debit card in school, and I'll get a credit card when I graduate. So what happens? Allison was able to put all her expenses on her credit card, so she didn't really have to use any of her own money, and she submitted her expense report. Her employer reimbursed her for her expenses, and she paid off her credit card. Everything was fine. Sam didn't have a credit card though, so he had to use his own money, and that made it tough for him to pay rent. It made it tough for him to travel and do any of the things that you would want to do after school. He was able to get a credit card about 6 months later once he started using it a little bit, but this is a great example of why you need credit now. If Sam needed a car to get to his job, he might not be able to get an auto loan because he had no credit, whereas Allison would have no problem. Next slide, please. All right, and Tom's up.
Thank you. So if you want to go to the next slide as well, we'll be talking about what is involved with building a credit report, what's looked at, the answer to some of those questions. And one of the things about a credit report, think about it as a transcript for your credit report activity. How have you been paying your credit and managing your credit activity? That's loans, credit cards, over the course of your life. And so a lot of information appears on a credit report that all is transmitted. So you'll see when you access your credit report and when you grant lenders and other individuals like a apartment landlord access to a credit report, they'll have your name, address, your date of birth, recent employers, as well as some other personal information. Have every credit lines, at least the ones that are open, and if you've ever defaulted on an account or had a collection account activity, that would appear on the report. So a lot of personal information appears, and you will grant them permission. So the key question is how to make sure you have good credit for when you need to be presenting that. And one of the questions that people asked in the sidebar was, do you need credit, a good credit report to rent an apartment? Absolutely. Especially in some of the large cities, they absolutely want to make sure that you, as a person that they're going to grant the use of their property to, has good credit and will pay them back. So they'll pull it, and in our role, we've seen numerous people who either have no credit history or poor credit, who are denied access to even an apartment. And so it's really timely to build it. And as mentioned, the length of history is a part of your credit report, and the longer you have, the better. So if you can go to the next slide as well. One of the ways this is the report where you get and obtain a copy of your credit report for free. You should never pay for a copy of your credit report, but this is annualcreditreport.com, and it's managed by the U.S. Federal Trade Commission. So it isn't very sexy, but it's very basic, and you can get a copy for free from each of the 3 companies, the major credit bureau companies, Experian, Equifax, and TransUnion. So I recommend everybody, once you start using any form of credit, whether it's student loans, credit cards, or anything else credit related, access to make sure it's being reported appropriately. So, and if you ever find information incorrect or invalid on there, you have the right to dispute it, and by law, they have to take it off if they can't prove that's valid information. So you need to start the action once you realize there's information on the website that actually provides that, and also is available on the FAO website for that. So one of the things that's also is a big key question is, what's a credit score and what's involved? A credit score is basically one number that summarizes all the information on a person's credit report and validates what's active on that credit report. So if you can go to the next slide. Which is what is your credit score? And that is, credit scores basically is a snapshot. It's saying the likelihood a person's going to pay. It's looking at, in the next 24 months, paying in a timely manner. And FICO, Fair Isaac Company, is the greater of all credit scores, and about 90% of lenders use it. So it's the one that I like to speak to, and it should be the foundation for people understanding what a credit score is. So think about your SAT scores, where it's on a bell curve. The scoring range is 300 to 850 for the FICO score, and as you can anticipate, the higher the score, the better. So you really want to understand what drives the score, is to know what helps to build a proper credit. It is always changing, so the thing to always understand, no matter where a person's credit may be, your personal situation, you always have the ability to make it better or worse. It really is in your control. So we'll give you some steps on how to make that a better report and better reflection on your good credit. So when you need either renting an apartment or buying a car or some other activity, you will get the best rates and put yourself in a good fashion. So the next slide illustrates what range and what's going on underneath the FICO score. So it's basically saying the likelihood somebody will pay in a timely manner over the next 24 months. If you look at the slide, it's saying people on a score of 620. There's a 25% likelihood that they will not pay on a timely manner. So 25% there will be a default by a person in that score if they have a score of 620. And the higher your score is, 680, there's a significantly better repayment pattern, and you get into the 800 range, it's less than 0.5%. And that's the direction that, as a lender, they want to look at. And that, as you as a consumer, you want to have a better credit history, credit score. And so the elements that are factored in, the next slide reflects what are those 5 key factors that influence it. And the 2 most important are payment history, making payments on a timely manner, and showing good patterns. And then the second one is outstanding debt. Do you have a lot of outstanding debt, and are you managing your debt wisely? And I'll talk to you about those 2. The next 3, credit history, we talked about it. The longer credit history, the better your score is. The next 4th one is pursue new credit. If you're looking for a lot of new credit and applying for a bunch of credit cards in a very short period of time, that will pull a person's credit score down. And then the final is what I call the credit mix. So do you have a healthy mix? Somebody with 10 credit cards and nothing else from credit related would be considered a poor credit mix. And those each combined will influence a person's score. But as you can see, the most important is payment history. So I'll reflect that. So payment history is really making payments in a timely manner, and it's looking at the key component is the most recent payment history, the last 12 months. Has that person paid their debts on a timely manner? If you miss one payment, it could plummet a person's credit score dramatically, but then you start moving it up. And information only appears, poor history only appears for a maximum of 7 years. So with the most recent being the most critical. So one of the key things is knowing what your obligations are, don't getting over your head and paying those bills on it when you need it. Where we see students who recently graduated get into trouble is they move and don't change their addresses, and say utility payments or credit card payments or loan payments, they don't tell, and the bills go to the old address. That's where people end up really having delinquencies. So the next slide reflects the second biggest factor, and again, another factor where you can influence it, and it's called outstanding debt. So it's saying, do you have a lot of debt? And where it really has the biggest is credit card debt and maxing. You have what is called a credit limit on a credit card, and if you're hitting that credit limit going above a certain percent, that's where the system looks like you're stressed. So the suggestion is, say you have a credit card limit, which is $2,000, use only 25% or $500 on a standard basis. Because if you're constantly using up to the maximum of your credit limit on a credit card, it makes the system look stressed, and it reflects poorly on a credit score. And then the final thing is the healthy mix. So one factor on that is if you have if every time an individual goes to a store and gets a store credit card as a discount, which a lot of us will be offered that, every open credit card reflects on a credit report. And having a whole host of credit cards from stores reflects poorly, it does pull down a person's credit. So the rule of thumb at max is 2-3 credit cards, with being the big organizations, primarily a Visa, MasterCard, as well as American Express as primary, and don't really extend beyond that. So one of the big questions that has been coming up is, how do I build credit wisely as an undergraduate? And the next slide reflects that component, and it really comes down to using credit wisely. One recommendation is to borrow if you have a small amount from a lender that will be reported to a credit bureau or credit agency, and pay that off for a 12-month period. What we've seen is a person who borrows as low as $300 and who has no credit history and pays it within 6 months, they would go from a no credit to a credit score of 720, 730. It's a very small action that can dramatically improve. It's really taken in a wise, controlled method. And the other part is obtaining and using a credit card in a responsible way. And just really, one quick suggestion is buy a cup of coffee, pay it off when you get the bill, and use that in that fashion to help build credit. So small steps that can dramatically improve your credit profile and credit history, and gives you that foundation. So you want to go to the next, Neil?
Yeah. All right. So I'd like to take this opportunity to answer a couple of questions. So going off of what Tom said, let's answer Monica's question. What are some of the recommended ways for a college student to start building credit? Is really just getting a credit card. That's the easiest way. You can get a secured credit card or an unsecured credit card. Most students start with a secured credit card. You can get a small loan from a local bank, for example. Any sort of credit transaction is reported to the credit bureaus, so that will start building your credit. But as Tom said, really the easiest way to do it is to get a credit card, then charge a $2 coffee on it, and then don't charge anything else. Just pay it off. You can do so immediately online, or you can wait until the end of the month when you get your statement. But you have about 21 to 30 days that it's called a grace period that you don't have to pay. But really, I would just say buy a $2 coffee, pay it off, and as far as the credit bureaus are concerned, you are paying your debts responsibly and therefore building credit. And now let's answer Emily's question. It's how many times per year am I allowed to check my credit score? Does it negatively affect my credit score to check it? You can check your credit score as many times as you want per year, but it's not free. It can cost between $8 to $10 to get your actual score. And remember that it's just a snapshot in time, so your credit score when you check it may not be the same as your credit score the next day or the day after. I think what's more important to keep an eye on is your credit report, of which you can get 3 free per year, 1 from each of the credit bureaus, and you can do that at annualcreditreport.com. Key thing to remember, that we hear these advertisements for freecreditreport.com. That is not actually free. Do not go to that site. It's annualcreditreport.com. There are also other services that will give you an estimation of your credit score, but the only time you'll actually need your credit score is just before you apply for a loan, for an auto loan, for a home loan, or for private student loans. Okay. All right, let's talk about the benefits of having a credit card. Next slide, please. So it offers you financial flexibility. It allows you to put some money on the card that you will hopefully pay off within 30 days or within 21 days. To give you an example, let's say you're going to be going to study abroad and you need to buy a plane ticket, but you may not have the money immediately, but you're waiting for 1 or 2 more paychecks. It allows you to still do what you do every day, your day-to-day expenses, but you can put the airfare on the credit card and pay it off at the end of the month. So it offers you flexibility. By using it responsibly, it helps you build a credit profile. Again, on-time payments and length of credit history is quite a big chunk of your credit score. So that's a great way to start building your credit. And it offers you a bunch of benefits that you may not have known about. First is increased fraud protection. So one thing I'd like to mention is the differences between a debit card and a credit card. A debit card is connected to your money. So, for example, if you go to a restaurant and let's say your bill is $80, you put it on your debit card, and the server accidentally adds an extra zero and makes it 800. Well, all of a sudden you have $800 less in your account. And yes, it'll resolve, but who knows? It could take a week, it could take a couple weeks, and you might need that money then. Whereas if you put it on your credit card, it's the bank's money, and it offers you extra protection. If your credit card number is stolen, you usually have zero liability when it comes to that, and the bank will deal with it. When it's on your debit card, you have to worry about it because it's connected to your checking account. It also helps with dispute resolution. Let's say you ordered something online and you never received it. It's not really a problem because you first contact the merchant, and if that doesn't work, you can contact your credit card company, and they will contact the merchant and they will figure it out. And more often than not, they'll be able to give you the money back. It also has this really interesting feature. It's an extra year warranty. So let's say you get your new iPhone and you get 1 year warranty with it. Your credit card will automatically give you another year, so you don't have to buy that extra warranty. It also has travel delay, lost luggage insurance, but as long as you put the full purchase price on the credit card. In some cases, it offers you price protection, particularly around this time of year. Let's say you buy a pair of pants at the Gap, and then they go on sale, let's say next month during Black Friday or something. You can call your credit card company and say, hey, it went on sale, and provide them some documentation, and they'll give you the money back. There are hosts of other benefits that many people don't know about, but we're telling you about today. And while they have to do with credit, it's a great feature of credit cards. Next slide, please. So how do you apply for a credit card? There are a number of ways. The easiest way is through the Harvard University Employees Credit Union. It's a service that's available to all Harvard students, and they have products specifically geared towards students, so I would definitely check there. Harvard Square banks, there are a bunch of different banks in Harvard Square. You can inquire about student credit cards there. Applicants who are either 21, who are under 21, you'll have to show proof of consistent income. So let's say you work at Widener, you do 5 to 10 hours a week. That's consistent income. It's a part-time job, so that will suffice. In some cases, you might need a co-signer, a parent, for example. What you'll need to apply is proof of identity, so a license or a passport, which you had to provide anyway when you got your first part-time job at Harvard, your current address, your previous address, and your employment, so the source of income, where it's coming from. There are some pitfalls that we'd like to warn you about. The first of which is applying for a card with an annual fee. There is no reason that you should be paying an annual fee for a credit card. That is just a way for the banks to make a little extra money. There are plenty of no-fee credit cards available to you, and as long as you pay off your balance in full every month, you will actually never pay any finance charges, late fees, interest, or the annual fee. But again, it's important to make your payments every month. You shouldn't get a credit card for a specific large purchase because of a certain promotion. That's not a wise use of credit. It kind of leads to impulse buying and buying things that you might not have otherwise bought. So keep that limited. Not understanding the terms and conditions of the card can be problematic. I know a lot of us just click accept and move on, but you really need to know the repayment terms, the interest rate, the APR, the annual percentage rate, what the late fee is and what the policies are. And you can also find out what the benefits are as well. You never want to max out a card. As Tom had mentioned, 30% of your credit score is the debt utilization ratio, and you want to keep that below 30%. So if you have a $1,000 limit credit card, you never want to go above $300 there. Another pitfall is applying for a credit card for specific benefits. The most notorious of these are the store credit cards where they say, hey, you can save 10% by applying for this card. But every time you apply for a card, it lowers your credit score. So it's not something that you want to do. You would rather just either pay in cash or put it on a credit card that you already have. And another pitfall is not paying attention to the APR. That's the annual percentage rate. That's how much interest you would be paying over the course of the year if you did not pay off the credit card in full every month. So let's talk about how to be a responsible user of credit. Like I said, and I'll keep saying it, paying off the full balance every month is very important, and it could really help you be a responsible borrower. You don't want to spend more than you earn. A credit card can allow you to do that, but you definitely don't want to do that. You don't want to use a credit card for impulse spending, meaning let's say it's payday and you're walking through Harvard Square and you see something in the store and say, you know what, I really deserve that. Do not put that on your credit card. If you're doing some impulse spending, we're all guilty of it from time to time. You want to make sure to either pay cash or be absolutely sure that you'll be able to pay it off at the end of the month. It would help to build a budget. Just take all your income and expenses for the month and figure out where you are. A good way to do that is to track all your spending for a week or two. Just use your Notes app on your phone, like $2 coffee, $4 sandwich, whatever it is. You'll be surprised what you learn after that week. And we've mentioned this before, but consider putting one charge on your card per month and paying it off immediately. The easiest thing, buy a cup of coffee and then make sure you pay it off. It's very easy to forget that you charged that cup of coffee, so make sure you remember that and either pay it off immediately or check your statement, log in online and check your statement frequently. Check your credit report at least twice a year. It's free. You get one from each of the 3 credit bureaus, so make sure you check it. And if you have questions about how to read your credit report, you can always ask us, and maybe we'll have a future hangout on that. Check your statement every month. They'll send you a statement either in PDF or to your mail center address. So be sure to read it and be sure to understand what's on it and to make your payment. If you pay off your credit card in full every month, there is no interest that you will have to pay. No interest will accrue. And if you can't pay in full every month, then stop using your card until you pay it off completely. Okay. So we're going to move on to the question and answer session. Our top question right now is how do credit scores work internationally? Well, each country has their own way of doing it. So if you want to get an apartment in a foreign country, chances are, in fact, they will definitely not definitely, but they will not look at your American credit. They have to pay for that information, and it's unlikely that they will do so. And your American credit score will not transfer over to other countries. Okay, so if you're an international student and you're here for college and you hope to stay here after college, we definitely do encourage you to build your credit history, but know that it will not transfer to your home country. Let's move on to Jared's question. Are credit scores and histories really the main requirement that financial firms are looking at when I apply for loans and mortgages? Yes, they are looking at your credit score. That's how they're going to make that decision. That is what the credit score is there for. It is a snapshot of the information in your credit report. So if a lender couldn't, they have so much volume of business that they can't really look at your entire credit report and figure it out. So they created the credit score to help them make an easy decision about you as a borrower. Let's see. What if I have credit from another country? Can I use that in the U.S.?
The question is, do you have a credit card or an access like a Visa or MasterCard that's issued from a bank from another country? They could use it. The challenge is it's not building up a credit report, credit history in the United States, and normally they would be impacted with extra fees, current fees, foreign transaction fees, as well as currency exchange fees. So for anybody that's in the United States for any significant length of time, such as a student, we encourage them to obtain a credit card and develop credit in the United States for your own cost and from building up perspective.
Yeah. All right. So let's see. Let's look at Calvin's question. One of my loans is only reported to Experian, not Equifax or TransUnion. Is there something I can or should do to encourage the creditor to report to all 3 credit reporting agencies? The lender is Harvard. I wouldn't worry about that. Tom, what do you think?
There's some lenders have the choice to who they report to. Most report to all 3, but in the case of this, Harvard has decided they only want to report to 1. If you run into a situation that you're looking for credit, say, or getting an apartment or a car, you can specifically tell them to that you have more credit on Equifax or Experian in this situation, and they should probably look at that first. But once you start building credit, it'll start transferring across multiple entities. They'll pull it from others.
Yeah. Before we sign off, there's one more slide that I'd like to show you guys. It's corrections to common credit report myths. So even when paid, the bad debt may remain on a credit report for 7 years. Actually, Tom, I'll let you handle this.
So there's a lot of myths out there that we hear and see individuals talk to. So even when paid, it will be out there on your credit report, but you're immediately, once you pay it off, it'll start building positive credit. So positive credit stays in your credit report forever. Negative credit will stay for maximum 7, in most cases, max or potentially small things, 10 years. So, but it won't come off until you resolve the issue. Next one is not paying the full balance of a credit card balance each month will not help improve your credit score. So there's myths out there that say if I only pay part of a small payment, it's better to help my credit score. That's absolutely not the case. The only entity that's excited about that is the lender of the credit card because they receive interest. So pay off your full balance. It will reflect a good situation in your credit report, credit score. And the next one is using my debit card at a store, but saying to them, credit, that does not help build a credit. Debit is coming out of a checking account. It's not a credit. Even if it says MasterCard or Visa on that debit card, it is not a credit card. It won't build credit. So you have to know that. And then the final piece that always comes up as a question is requesting your own credit report does not impact or harm your credit history or your credit score. You're actually, by law, encouraged to do it for free. As we said, you can obtain it from annualcreditreport.com, up to each of the credit bureaus 3 times a year. So we really, once you build credit, you should keep access and look at it to start knowing what's on there.
Great. All right, we have a question from Sarib about once I have scored the 720 credit score through the $300 repayment over 6 months, plus the $2 coffee followed by a medium payment, do I need to continue borrowing and repay after 6 months? How long does the credit score last? You do not need to take out another loan. You've already established some credit history, so that's working in your favor. It is a good idea to keep charging that $2 coffee and paying it off once a month, because you will continue building credit history that way. Lenders want to see as many on-time payments as possible. Tom, do you have anything to add there?
Yes, so the way the scoring system works, it gives better credit to what's called an installment loan. That's that loan note of that short loan, such as a student loan, a mortgage, or this short, than a credit card, which is called a revolving debt. So that's why, for an easy way to build up credit very quickly, that short-term loan is the best model. But if you don't have active credit, once you pay it off after 6 to 12 months, it would take off your credit score and wouldn't appear. So that's why you also need to start using a credit card wisely to keep that credit and keep building up that credit history and credit report.
All right, and one final question from Abdullah. Should you prepare the credit card before you move to campus or when you move to campus? You should get a credit card when you feel that you are financially responsible and can take on that responsibility, meaning you know that you're going to make your payments on time every month, you're going to pay it off in full every month, you're not going to spend impulsively on your credit card. It's going to take some self-examination to figure out whether you can do that. And I would start with creating a budget, tracking your spending for a week, and if you feel like you have a good handle on your spending, then by all means this may be the right course of action for you. All right, Tom, would you like to add anything?
Nope, it's a very powerful tool, a credit card, but it is very dangerous, and that's why we've emphasized that. I've seen and talked to numerous recent graduates who have overextended on their use of credit cards and graduate with thousands and thousands of dollars of credit card debt, and it's a very challenging thing to get out of. So if you ever find yourself into not paying off that credit card in full, stop using it and seek out counseling support. That's what the credit union is there for. That's what the financial aid office can help with. But it's far more important to do that than keep using it. All right.
Thanks everybody for joining us today. This is going to be a static presentation that will be available for future viewing, and we're going to be doing more Google Hangouts on topics such as budgeting and taxes and other financial literacy topics. If you have any ideas or things you'd like us to talk about, just reply to the email you all received from us, and we'd be happy to host those events. Thanks again.
Thank you.